Assalamualaikum and a very good evening. The relationship between trade, capital, financial development and economic growth in Malaysia and ARDL approach. A vast number of studies have been taken to determine the key causes of economic growth and future sources of growth. Many academics have focused on the economic growth determinants such as capital, trade, financial development, stock market development, foreign direct investment, and others. Beckett, Latif 2019, 2018, Pace 2018, Odo et al. 2017. Trade has a positive effect on economic growth according to the majority of past studies. Also, the literature acknowledged that the financial development helps the economic growth through various of channels. The well-functioning Malaysia financial sector may also has positive effect on exports to influencing on the production growth. Kokmenoglu et al. 2015. Ahmad et al. 2020 found that there is a long-run and short relationship between financial development and economic growth in Malaysia. However, there is no evidence in this study for finance-led growth, and there is a unidirectional causality running from trade to financial development. And financial development indirectly causes economic growth through trade openness channels by using granutas. Galacia and Uzdem, 2020, investigate the relationship between financial development, trade openness, and economic growth in South Korea for 1977-2018. The study found that there is a long-run relationship among GDP, domestic credit to private sector, and international trade. This can be concluded that there is a sufficient evidence to support the view that the financial development is an essential for economic growth. Peace 2018 examines the long-run relationship between financial development and economic growth in 16 African and non-African low-income countries for the period from 1995 to 2014. According to the results, there is a long-run relationship between financial development and economic growth in low-income countries. According to Kehoe 2020, this study will investigate the relationship between financial development, trade openness, and economic growth for a panel of 11 West African countries for the year from 1985 to 2018. According to the results, there is a positive effect in the short run and long run between financial development and trade openness on economic growth by using panel analysis. According to Lawal, Nwanji, Asalaye, and Ahmed 2016, this study was examining the relationship between economic growth, financial development, and trade openness in Nigeria. According to the findings, the ARDL model shows that there is a long-run equilibrium link between economic growth and financial development, as well as a link between economic growth and trade openness. According to Odo, Adoke, Onyisi, and Chukwu 2017, market capitalization, also known as market valuation, is the share price multiplied by the number of shares outstanding. Some researchers have been reported sign of positive impact of capital market development on economic growth. According to Kuvshinov and Zimmerman to 2021, stock price fluctuations in the short run are often disconnected from economic fundamentals due to slowing economic growth, market capitalization, and corporate income in US increase without long-run cross-country results. It's impossible to determine if these recent trends are just a country-specific short-run divergence or part of a larger change in relationship between the stock market and economy. However, there is some suggestion that the latest rise in stock price could be unique to the US and merely reflects reversals to long-run mean after the profit decrease in the 1960s and 1970s. Hypothesis. First hypothesis, a significant dynamic relationship exists between trade, capital, financial development, and economic growth in Malaysia. Second hypothesis, significant long-run elasticities exist between trade, capital, financial development, and economic growth in Malaysia. Third hypothesis, significant short-run elasticities exist between trade, capital, financial development, and economic growth. The data for these studies is from 1981 to 2020, which is 40 years. and 40 years number of observations. Data source World Development Indicator, World Bank, atau regressive distributed lag ARDL method is used in this research to study the data. A co-integration methodology proposed by Pasaran et al. 2001 is used to assess the existence of the long-term relationship between the variables. Annual data is used in this study to test the relationship between trade capital, domestic credit to private sector, and market capitalization and gross domestic product. ARDL bound test is the most suitable method to use to check the dynamic relationship among the variables for small sample size. This is our model where the dependent variable is Y, economic growth, and the independent variable are T as trade, K for capital, D domestic credit to private sector, M market capitalization, and E is the error term. Table 1 shows the bound test result among the variables, namely economic growth, capital, trade, domestic credit to private sector, and market capitalization. The result confirms that there is a long-run relationship among the variables. The F statistic is greater than the upper bound at a 5% significant level. The H null of no integration among the variables is rejected at the 1% significant level. Okay, based on the figure 1, short run and long run elasticities and error correction representation for ARDL model, trade has a positive inelastic towards economic growth in the short run as well as in the long run at a 1% significant level. Meanwhile, economic growth capital is positively inelastic in the long run at 5% significant level. On the other hand, economic growth, domestic credit to private sector, and economic growth market capitalization is negatively inelastic in the short run as well as in the long run. The result is consistent with Krill et al. 2015. Findings: the error correction models shows that the coefficient is negative and significant at 1% significant level. This indicates that the model gets back to equilibrium in the long run after short run deviation. Also, based on figure 1, this study used 4 tests to diagnostic our models such as serial correlation, functional form, normality, and heteroscedasticity in the error term in order to analyze the validity of these models. The estimated probability values for serial correlation, functional form, normality, and heteroscedasticity tests are found to be more than 10%, which confirm that all of these diagnostic tests are insignificant. There is no serial correlation, functional form, normality, and heteroscedasticity. Based on figure 2 above, it is found that cumulative sum of recursive residuals, CUSUM, and cumulative sum of squares of recursive residuals, CUSUM square, statistic plots remain within the crucial 5% significant level bounds. When the CUSUM and CUSUM square statistic plots remain within the crucial 5% significant level limits, the null hypothesis of all coefficients in the regression given is constant and therefore cannot be rejected. Therefore, from this we can conclude that the outcomes of the estimated model are accurate and valid. This study evaluates the relationship between trade, financial development, market capitalization, and economic growth in Malaysia for the 1981 to 2020 period by using ARDL model. The study confirms that there is long-run relationship among the chosen variables in the case of Malaysia. Also, the results show that there is a significant and positive relationship between trade and economic growth in the short run, as well as in the long run at a 1% significant level. Meanwhile, capital has a significant positive relationship with economic growth in the long run at 5% significant level. Other than that, the results show financial development via domestic credit to private sector and market capitalization have a significant negative impact on economic growth in the long run. This is in line with Krill et al. 2015. The policy suggestions are likely to focus on ensuring that banks and financial sectors are empowered and positioned to supply the required funding for the economy's productive sector. Furthermore, because trade has been identified as a contributor to economic growth, it is recommended that policies that promote trade be pursued, such as the establishment of favorable bilateral and multilateral trade agreements, the establishment of export processing zone, tax holidays, and other incentives. Trade and capital play an important role to economic growth now and then. However, the audacity of financial development keeps on robust is definitely vital despite current and future uncertainties for better future. Thank you.